Hey guys, this is Andrew for trendsenses.com. So very quickly, for those who haven't watched my videos yet, I've been working as a professional trader for the past 6 years in Hong Kong, and right now I'm doing YouTube videos where I mostly talk about technical analysis, which is something that I use every day to set up my trades. And I want to show you guys how to do it yourself. So in today's video, I want to make another analysis on AMC. Let's get into it. And yes, so for those who have watched my previous videos, I was basically, so let me sum up the situation here. I did a video here where I started to be bullish. Guys, let me just quickly explain again how I do my analysis. I like to use Elliott waves. This is all the drawings that you can see on my charts. I'm going to go through this, but I only use Elliott waves in order to draw some efficient trend lines. This is the most important thing. This is how I find my signals most of the times. And here I had this trend line connecting this high and this high, and that gave me a breakout here. I told you guys, I gave you this breakout. This was like around the 15th of April. And as usual, the breakout occurs the same way. It is broken, then retested. So here, for example, the right level to enter this trade would have been around 920. But this is the past. Then I did another videos where I basically was showing you guys the different scenarios that I was seeing with Elliott waves counting. And my preferred scenario was that actually, so let me redo this with you guys. So I'm going to show you where we are, what is happening right now. My preferred scenario was that this ABC here, this corrective phase that lasts between the 22nd of March and the 14th of April, all this corrective phase has been complete. Once we broke this trend line here, then I had different scenarios, but my preferred one was we're making a 1-2 and we are in the third wave. But to be in the third wave, I was expecting some strong moves up coming very soon. And I told you guys, I think during the weekend, because I did an update after Friday's close, that I was expecting a very bullish Monday, which actually happened. And I'm telling you again what I've said already, and then I'm going to come to the new stuff. I was telling you that the MACD would turn positive just mathematically, because if the price action is not going strongly lower. And this is exactly what happened here, guys. The open was around like 1017, gap up, get 1070, sorry, doing a nice gap up, and immediately we went to visit some new highs in the recent past, which created a lot of bullish momentum. The MACD turned green, a lot of investors stepped in the game, and bought IMC. So we had those 2 more days coming here. So let me now analyze the situation and give you the new levels and tell you if yes or not I'm still bullish. So I'm not going to keep the suspense longer than this. Of course, I am bullish because here we are exactly in my scenario. We are trading above the moving averages. The MACD on the daily is green, and as we can see here, only 3 days. So usually you can see that those periods, they last around 10-15 days. So it's not because the MACD is green that the price action is going to go higher every day. It's just kind of, it's a cycle. It's a bullish cycle that we're having, that we started here. The volumes slightly went up, but it's not massive yet. For a third wave, I'm expecting more. So I'm expecting actually more moves up to come this week and hopefully next week as well. Once again, guys, 4 hours time frame, the best one to use. So you check the moving averages and you see where you have support. Here you can see that the 200 and the 100, they are, and the 50, sorry, they are quite far away. So they could be used as support levels if the price action is going lower. But in a third wave, guys, we're not going to revisit those levels. If we go there, if we break actually the 20, which is acting as support right now, we need to ask some questions. We need to try to understand why the price action is going lower and are we really in this third wave. Another way to find the support levels. So here the support level is around 1060 and it's growing 1070. Tomorrow is going to be around 1090. So below 1090, careful. If you are wondering, guys, if we are just in a healthy correction or if we are in a new move down, you can use one very efficient tool, which is Fibonacci. So to do that, you measure. So that's why ELLIOTT wave is very useful as well, because you need to measure a wave. So here, let me first do the ELLIOTT wave counting. So I need to go on 30 minutes time frame, because this is a counting, a daily counting, and we need to find 5 waves here and try to guess if yes or not this move up is finished. And here, when I measure this, so 1, 2, is that a 3, or is a 3 maybe higher? To answer this question, try to see if you can find 5 waves here, and I can. So 3, 4, 5. And why is this a nice 3, guys? Just because of that. Look, 3, 4, 5. All right, I have 5 waves in my third wave, so I know this is a third wave. If this is a third wave, this is a first, this is a fifth. Let me get rid of this. I'm just showing you guys that the third wave is clean, and this is a typical fourth wave. Then 1, 2, 3, 4, 5. Here as well, I can have 5 waves. So actually this first cycle is complete, and we are just correcting. So now that I know that this is the first wave of my third wave that is here in yellow, you see this third wave, guys, this one is just the first wave, and we are just correcting this first wave, which is absolutely normal. We are still bullish here. Yeah, and to answer even better this question, you can measure this wave and check the retracements, guys. There is the bullish zone and the bearish zone. The bullish zone is above 50%, and sometimes we can go to the 1.618 retracement level that is just below. So here, I would tell you that my scenario is still fitting very well as long as we stay above 1060. Again, you can see that this level is giving you here up 1060 perfectly, guys. This level is giving you by 2 different methods: the moving averages on the 4 hours time frame. You also have the top of the third wave here, so this is support as well, and you have the 50% retracement of Fibonacci. So I would say that 1060 is my strongest support on the short term. If we break it, we still have one more chance at 1020. All right, this is still possible, but let's be honest, here we have already the ABC, guys. Okay, so I'm not expecting any further correction, but the C wave can be a bit longer. All right, this can happen. So maybe we could have this. So this is kind of my bearish case, is that the ABC would actually maybe even be like this. Okay, so we need to see what is going to happen around the 1130 area. I want to break this area again. We did it already once, which is confirming our bullish case, but we didn't hold above on a daily time frame. So this scenario is still on the table. Then we would go to 1020. We could still be in a bullish development as we stay above the 0.618 1020. So this could still be a typical 1-2. All right, this could still work. All right, and then we go to the third wave here. This is very possible as well. So let's see, 1060, 1020, they are my support level on the short term. So I told you that the 1130 level was very important. The reason why I said that is that I was still looking for a WXY correction, you know, something like this. And this is now off the table, guys, because here we broke this high that was created by the B wave. On the 4 hours time frame, it was broken, perfectly retested. You can see, I'm going to show you guys how this acted as support as well. But this scenario is now definitely off the table. All right, it's not possible by following ELLIOTT waves rules. By the way, for those who are interested, just click on the link in the description of this video and you're going to receive a free training where I explain everything about ELLIOTT wave rules and how to use those rules between them. So here, for example, we cannot go above the B wave if we want to have a WXY. So this is now off the table, guys. So we are left with our only scenario that is bullish. And here, like I said, the typical situation would be we just go higher right away. So I'm doing this video on Thursday morning in Hong Kong. So you're going to receive it for Thursday morning in the US in a few hours. And I'm expecting a bullish Thursday. One more thing, let me show you how we reacted well on this level. So here, guys, I told you 1130 was an important level, and I think it's interesting for you guys to notice, you know, that of course this level has been spotted not only by me but by all the day traders and maybe even long-term investors, because here you can see that we first arrived, we got rejected. You see on a 30 minutes time frame, we got rejected. Then we blew right through it, we retested it here, we go here, retest again, consolidate, breakout again on the downside. And right now, I don't expect this. So on the daily, like I said, it was broken. Okay. But guys, as I always tell you, for a breakout to be confirmed, you need to have 2 consecutive candles trading below the breakout level. So here I have one, and I don't expect to have a second one. Let's see, I might be wrong here, but you know, everything is going in the same direction for me. One more thing I want to show you guys is about the divergences. I show you how I spot that there would be a reversal coming. You know, I showed you guys that I had a bullish divergence here, price action going lower, MACD going higher. All right, so this was a bullish divergence that I had. I show you guys this, and here I'm checking if I don't have any bearish divergence. It's very, you know, it's to control if your scenario is actually correct. If you see a bearish divergence, then you need to worry. You need to ask yourself, are you actually thinking about everything properly? So here, to check the divergences, as usual, guys, we connect the recent lows, for example, here, and we see if the MACD is going lower. Here it's not going lower, so I don't have a hidden bullish divergence. So no bullish divergence, but I was telling you guys that we are looking for some bearish divergences. So then I connect the higher highs. I try to see if the market is actually doing lower highs with the MACD, but it's not the case here as well. You see higher highs. Let me show you quickly what are the different divergences. All right, so I was looking for some bearish regular divergence, so market going higher and the MACD going lower, you know, making higher highs and the MACD making lower highs. I didn't find any of this on the hourly time frame, which is comforting me in the fact that the bullish case is valid. Now, this was the hidden divergence that I had last week on the hourly time frame, which was telling me that the bullish case is my preferred scenario, and we're still having this hidden divergence on the long term. Let me show you again. On the long term, we're still having here, guys, the bullish hidden divergence market. So let me go on the daily. Market making higher lows with the MACD making lower lows here between 0.2 and minus 0.2, roughly between Feb and April. In the 2 months period, market making higher lows, the MACD making lower lows. This is a hidden bullish divergence, which was also telling me that the bullish case is the most likely one. So I think I've told you guys everything. I'm going to do another video very soon where I'm going to analyze the news. I'm going to analyze the option market as well, see if the volatility is giving me any information, see if the positions of the open interest on this option market is growing in the right direction, what is the synthetic short. So if you guys enjoyed this video, please don't forget to click on the sub, like and bell button so you're going to be the first to know when I upload anything new, and stay close to shore. I see you guys.